Dun, dun, dun. Welcome back, ladies and gentlemen, for what is going to be an important daily cryptocurrency market update, as today is the day that the Federal Reserve deliver their rate hike decision and subsequently the rate hike. The kind of consensus is it's going to be a 75 basis point rate hike. We are going to get into that. We are going to start things off with some technicals. We have this technical pattern, this head and shoulders that I believe is going to play out. We also have the rate hike, which could be the catalyst to cause a spill. We haven't really spilt through this neckline yet, so it's not really been confirmed yet, in my opinion. We still could have another peak on this right shoulder, just like we had on the left shoulder. Some people who observe technical analysis would say that that is kind of a rule. You know, there has to be symmetry in the shoulders. I'm not convinced about that. I think that, you know, I've seen plenty of unsymmetrical left and right shoulder, head and shoulders patterns play out. So we will kick things off with the technicals. You know, this head and shoulders does take you below 15K if the target is met. And then we will jump into the news. Of course, the big news today being the fact that the Fed expected to hike rates by 0.75 of a point again, but its forecast may matter most. So by forecast, it means kind of like what they did at the Jackson Hole, where they really go into what they're setting out for their monetary regime moving forwards. And we know, why does monetary regime matter from the Federal Reserve? You know, and subsequently the dollar, which is the largest sort of pool of liquidity that there is for markets to take from. Well, we know that markets going up and down is all really driven via liquidity. On a general scale, of course, you're going to have some stocks that perform subsequently better than others. And we know that when you're talking about Bitcoin, and actually I was going to bring the dollar chart up, but I'll just overlay it. You know, it's a very much a dollar story, guys. And this is the kind of journey that we've really been on since November. So let's get straight into it. Let's start by looking at this head and shoulders and recapping, and then we will get into some news like the fact that Russia's Putin announces partial military mobilization. You've also got the Bank of England looking to do rate hikes. I think this might be why the FTSE is catching a bit of a bid. And we also have some good news in the fact that mortgage demand is rising for the first time in 6 weeks. But let's kick things off with a little bit of technicals. This is the head and shoulders pattern that we have in play, and I do believe that this is going to spill to the downside. Now, just because today is certainly news-wise and sentiment-wise quite a bearish day, doesn't mean that it's going to spill here. You could get some resistance. You're going to get early shorts coming in. You are right at support here for Bitcoin. So it's very natural. It'd be very scary if we didn't get some sort of a bid here and we just spilt right through. It's very natural to get some sort of reaction. Certainly from a trader's point of view, and for those of you that do trade, many scalpers, many sort of short-term traders will actually long this as resistance because it offers a good risk to reward, or support, sorry. So that's why you'll always get a bid round about support. It's never a good idea to short at support. But that being said, it is rather an ominous day with the rate hike looming. So we do expect this to spill. How this spills, though, is the real question, and the markets will, you know, reveal all. Do you get some sort of a second peak? And then we see, maybe you run into this pool of liquidity over here, and then we see that downside, because you had two peaks over here. Like I say, some, not all, and I've seen many unsymmetrical, like I said, head and shoulders patterns play out. Some technical analysis people or observers will say you do need that second peak. Now, that second peak doesn't have to come up all the way here, but it could be a significantly weaker one before you get that slam. Really, what we're looking for to confirm this head and shoulders now is a slam, some sort of a momentum, volume-backed move to the downside. It is really what we're looking for. And if we don't get that, you know, there are always sort of other technical patterns that we have in here. You know, we did call for maybe the possibility, if we were looking for a bullish possibility, of this W double bottom, but I don't really think that that's very likely. I just think that there's too much going on right now, let alone interest rate hikes and monetary regime and liquidity getting taken off the table. I think there's huge risk that people aren't pricing in. You know, ask yourself this question: does the risk to reward add up in terms of being an investor? In my opinion, it absolutely doesn't. This was from today, and this is what I mean about things are very bearish kicking the day off, not even to mention the fact that the Fed is expected to hike rates later on today, or they are going to hike rates. It's just there's a 0.75, so 75 basis point rate hike sort of expected. It's what's being priced in. Markets are also pricing in 4% by the end of the year in terms of the Fed fund rate. So they've got a long way to go, or not a long way, but they've still got a fair bit to go to the end of the year. So if talking about that peak, maybe they do a 50 basis point rate hike. I'm almost certain markets would rally off that, even though we've really shifted the narrative from a couple of months ago going, oh, they're going to pause in September, don't worry. It's now like it's a serious interest rate hike that they're going to do. In fact, it's, you know, we're talking about 75 basis points here. They've done that in the last 3 consecutive rate hikes. Not only that, you've also got the rest of the world. So it's not just the Fed that are hiking. We've also got the Bank of England that are facing pivotal policy decision with pound at multi-decade low. They are going to have to be, and you're seeing this with all the governments around the world. We did an amazing interview with Francis Hunt, which really explains the dollar in relation to the rest of the world and the rest of the world's currencies. Well worth a watch. But your other banks around the world are trying to catch up because everyone's flying and fleeing to the dollar because including myself. Remember, we've been in dollars in regards to stable coins, even though I live in the UK, as a result of the dollar gaining strength. And really, like today, it's going to be all about the dollar. I mean, the dollar's catching a bid again. This is why crypto's, I mean, just on the short-term time frames, it's ridiculous how in sync these are. Absolutely ridiculous. Forget being a crypto trader, just become an FX trader right now. Goes up, Bitcoin goes down. Little rest period, dollar goes down. What does Bitcoin do? And now the dollar is actually pushing against Bitcoin. Certainly, this is a 5-minute chart. Remember, guys, I'm just showing you this for argument's sake, and it's continuing to push. So there's a lot going on today is really the point that I'm trying to make. You also have mortgage rate or mortgage demand rises for the first time in 6 weeks, despite sharply higher interest rates. So this is good news. It kind of shows that maybe there's not as much demand destruction as there once was. But at the same time, you know, that destruction, I don't think we've reached the peak of that demand destruction. And I think there's a lot more to come. You've got 2 negative pressures working against the economy right now. That is inflation and rate hikes. The Bank of England has already came out and sort of predicted that they think there's going to be a 2-year plus. Bailey has essentially come out, this guy, and said there's going to be a 2-year plus recession as a result of interest rate hikes. So going back to our thesis investors, we're not touching the crypto market here, even though we believe in it long term. And talking about Bitcoin, bringing it all back to the technicals, you know, you are on this sort of key support so far of this head and shoulders pattern. So we're expecting some sort of a move here. It looks likely it's kind of gone that way so far. But then again, going into, and I think there's going to be this ominous kind of potential pullback going into the FOMC as people take positions off, you know, looming over us today. So it's going to be very choppy. Stay safe out there. Don't take any big gambles. If you are going to position into this, make sure that you've got a very tight stop loss, because you are going to get 100% a volatile move coming off the back end of the FOMC. In fact, it's going to, you know, probably start going into it. So just stay safe out there, guys. And that's really all we've got for you in this one. You know, just looking at this head and shoulders again, talking about the breakdown of it. Again, to confirm this head and shoulders really for us, we need to see some sort of big break to the downside here. I also, whilst I've got the Binance chart, a lot of people say, why is Binance got so much volume here? In a kind of, when you're consolidating, if you see high volume, that means that you're going to get some sort of decisive move. And if you're consolidating with that high volume, a lot of times that'll mean potentially there's accumulation going on. The problem with using Binance is Binance, I think, only recently enabled zero fee trading on for their Bitcoin pair. So you've naturally seen a huge jump in terms of volume, because it makes sense. Certainly if people are running algorithms and bots, it's a lot cheaper to do so. So that's really all we got for you guys. Couple of interesting other things I can just throw in is also gold is very, very correlated to Bitcoin. Very correlated. So maybe, you know, there's some alpha to be had here in who front runs who. But I'm going to love and leave you on that note. If you've enjoyed this content, a like is always appreciated. So is a comment. This is, I think, at 7 p.m. today, UK time. Keep your eyes out for this situation escalating. Also, we're going to be looking at what the Bank of England is going to essentially decide to do, and keep an eye on the general economy and the health of it and the demand within it very closely. All I've got for you guys. See you in the next one.